at KBI, we haven't launched many strategies over the past 25 years that we've been doing this. We've only launched 5, and we believe that when we identify an opportunity, we want the confidence that the drivers behind that theme are going to be sustainable into the future. With the circular economy strategy, when we launched it 3 years ago, it was known, but I would say not widely known as an investment proposition. Over the 3 years that we've been investing in the space, we've certainly seen that change. There's an increasing level of regulation, there's changing patterns both in terms of how we're consuming goods and producing them, and they're all providing very nice earnings tailwinds for our companies. The other thing that I feel has evolved over the last 3 years is the recognition and the increasing level of academic research that's been written linking biodiversity and the circular economy, i.e. the circular economy is seen as ultimately being a solution to the biodiversity situation that we currently have globally. We're seeing that really manifest itself in terms of how our companies are talking and how regulators are putting laws in place to improve the biodiversity outcome into the future. Yes, so we're coming up on our 3-year track record next month. That's really important in terms of ability to go to market and sell the strategy. A 3-year performance track record is key in that regard. Over the 3 years, we've invested in some new sectors, and we've certainly seen a very diverse environment over that time period. Interest rates, the interest rate cycle has changed significantly. Inflation has been a major dynamic over the last couple of years, and we've seen how that has impacted various sectors within the portfolio, both positively and negatively. So 2024 was an unusual environment. Inflation was still very prevalent in the market, but we have seen interest rates begin to move downwards, and that's going to be a positive as we look ahead to 2025. 2024 was a great market from an absolute perspective, really positive returns. But from a relative perspective, it was a difficult year for active managers. There was a real narrow market in place with a number of large cap mega tech companies dominating overall market returns. In 2025, we feel that there's going to be an improvement in terms of the overall economic outcome, in terms of consumer sentiment in particular, and ultimately I think that in 2025 that's going to lead to a broadening in the overall market environment, which we feel will be positive for the strategy in terms of relative performance because of the balanced type portfolio that we manage.